Today we're going to talk about my experience with StashAway after using it for almost a year. I'm going to cover the portfolios I have, what were some decisions I made along the way, such as risk index and portfolio management, and how did it all work out in the end. So let's begin. The portfolios I have. As you can see here, I've actually deposited an okay amount, and currently I have 3 investing portfolios, which are long-term investment, mums, and dads. Naturally, the name speaks for itself. Mums and dads are both me investing on behalf of my parents, so every month they transfer a fixed sum and it just auto-debits into StashAway. Okay, but for this video, I'm going to focus mainly on my personal portfolio, which is long-term investment. If you want me to talk about the other 2 portfolios, tell me in the comments below. But anyway, I use StashAway as sort of a third safety net in case my own individual stock pickings fail. If you're wondering what the other 2 safety nets are, they are ETF and PRS. Before getting to the performance of the portfolio, your portfolio performance may differ from mine simply because I've actually switched my risk index several times over the 11 months. I actually started out with 2 portfolios with a risk index of 12% and 22%. 22 at the time was the maximum risk index I was allowed to set. In order to unlock 36%, I had to sit for the exam set by StashAway, and after completing it, I decided to consolidate everything and max out the risk index to 36%.
But wait, Sean, it says your risk index is 30%.
And you're right. At some point, I decided to drop it down to 30% because of the difference in portfolio allocation between 30% and 36%. If we compare the 30% and 36% risk index, you will notice 2 things: the asset allocation category and the asset allocation weightage. Now, looking at 36%, 39% of your assets are allocated into the US equity sectors, and 7% of your assets is invested in the Vanguard Global X United States Real Estate Index Fund ETF. Now, compare it with the 30% risk index asset allocation. Unlike its higher risk sibling, there's no money being invested in real estate ETFs, and 55% of your assets are allocated into the US equity sectors. Therefore, my decision to switch to 30% risk index was on the basis that real estate wasn't the best place to store my money with the COVID-19 pandemic still going on and with no sign of ending anytime soon. On top of that, I wanted my money to be more heavily invested in US stocks, which the 30% risk index portfolio does. So yeah.
So, you've done your fundamental and technical analysis. But what's next? The truth is, stock price doesn't just go up or down for no reason. There has to be triggers. And these triggers come in the form of information. But with all the news in the market today, it's difficult to differentiate between useful information and noises. Even if you are able to, you may not have the luxury of time to filter this information out. That is why, through our market update community, our team of experts with more than 10 years market experience will do the hard work of filtering the noise for you to bring you the most useful and updated information, helping you to make day-to-day investment decisions. Join us for a 7 days free trial today to gain knowledge, be informed, and filter out noise to make the best investment decision for yourself. Terms and conditions apply.
Here we have my long-term investment portfolio, which has been pretty good. Let me just preface this by saying that I deposited consistently even when my returns were at a loss. But anyway, as you can see, I've deposited 3,867.64 cents and have gotten 478 ringgit and 84 cents worth of returns in the span of almost a year. That's a total return of 12.38% from the initial deposit, which is actually pretty good. And if we take a look here, there are what StashAway calls as time-weighted return and money-weighted return. Simply put, time-weighted return is how well your portfolio manager has managed your investments since the first day of your investment. And money-weighted return is to see how well your deposit and withdrawal behavior has affected your returns. Okay, so looking at the performance graph, you can see that I made my first deposit late in May 2020. If you notice, the graph looks pretty flat up until September, and the reason being that I initially started with a monthly deposit. Now we've looked at September onwards. Whoa, what a jump! That was when I decided to consolidate my 12% and 22% portfolios into the portfolio I have now to maximize potential returns. Looking at October, there was also a spike due to me receiving extra income, which I decided to lump it into the portfolio. As we progress further in, you'll notice that the lines look a lot more active. This is because after consolidating my portfolio to the risk index of 30%, I did this to dollar cost average on a weekly basis instead of a monthly basis to fully take advantage of the volatility that comes with being invested more into the US equity sector. As I became more confident in my stock pickings and also wanted to dabble a little into cryptocurrency, I reduced the amount I would deposit into StashAway to 100 ringgit per month or 25 ringgit per week, hence the less drastic spikes in recent months. In summary, StashAway's performance for me after 11 months has been pretty good, with a total return of 12.38%, money-weighted return of 20.14%, and time-weighted return of 18.19%. It's a lot better than fixed deposit. Moving forward, yes, StashAway will continue to be a part of my investment toolbox with these returns. I will definitely still be using it in the months to come. How has StashAway worked for you? Tell us in the comments below.